All right. All right. Without further ado, good morning again, everyone. My name is Hartner Richards. I am an investment management associate at Sygnus Capital, and today our main presenter will be Jason Morris, Chief Investment Officer of Sygnus Capital, which is the investment manager for Sygnus Credit Investments. So I know that this report, is very exciting for all. It would have been one of our first reports post our most recent acquisition. I would encourage everyone to, while we go through this earnings call, to have a copy of the latest or release report to the JSC, specifically the MD&A, as Jason walks us through the presentation. And then towards the end, we'll have a Q&A section where I encourage everyone as housekeeping to just write your questions down in the Q&A box. And towards the end, we will have that section where we'll complete it. We'll also be having 4 poll questions that we'll ask before we start the Q&A. It should take at most 5 minutes, of those 4 questions, just to again enhance, just to get the idea of what it is that you're looking for from the earnings call. Just some additional data points to enhance our investor relations. So with that said, without further ado, Jason, I'll ask you to just walk us through the most recent results for Sygnus Credit Investments.
Thanks, Martin. Good afternoon, everyone. Welcome to the Q3 Earnings Call. So this is the first presentation where we can confidently say that SCI as an alternative investment company has its reach across the English, Dutch, and Spanish-speaking Caribbean with this most recent acquisition. All right, can you move to page 3? All right, so on this slide, we're just giving you a summary of the Puerto Rico credit fund investment, which is what I'm going to refer to the acquisition as going forward, and give you how that stack up, how that stack up inside the Sygnus Credit Investments Limited ecosystem. So the acquisition was for $21.22 million. We did that via a subsidiary, and the stake was for 93.66%, and it was concluded on February 28, 2022. And the company that was acquired was Accrescent Financial Corporation in Puerto Rico. However, due to the structure that was used, Accrescent will not be consolidated all the way up into SCI, and I'll explain this a little bit more. So the investment on the balance sheet of SCI, what we will see is an investment in Puerto Rico Credit Fund, for want of a better term. And we'll have that carrying value be reflected on the balance sheet on a go-forward basis. Now, prior to the acquisition, so we have now completed that acquisition, and what that acquisition has effectively done is given SCI access to the Spanish-speaking private credit market in $100.7 billion US territory in the Caribbean, exposure to a fundamentally stronger set of portfolio companies, access to industries that are not available in the English and Dutch-speaking Caribbean, such as the pharmaceutical sector, and to a lesser extent, also commercial real estate, private credit investments. And of course, Accrescent is an internally managed private credit firm. What this means is that it has its own set of employees and its own operating and operational costs, etc. And to integrate it fully into SCI, and the deadline for that is going to be by July 2022, that entire operation will be quote-unquote restructured, where just like you have SCI with a pure financing firm with no employees and an external investment manager who charges a management fee, that's the structure that will be reflected by July 2022. So in effect, as at the end of the March quarter, SCI's English and Dutch-speaking Caribbean private credit investment portfolio would have been $101.2 million. And then the new addition would have been the $77.19 million in 136 private credit investments spanning the Spanish-speaking Caribbean. And so in totality, SCI now has exposure to, call it $178.4 million across 166 private credit investment companies. For Accrescent, the $77.2 million that we are showing does not include $74.19 million, which is off balance sheet, right? These are service private credit investments, which effectively just means that, part of Accrescent's business is to actually have what you call true sales, where it structure transactions and then sell them off the balance sheet to a third party. And then those parties might pay Accrescent a small money to actually service those assets. So those assets are not interest-bearing assets for Accrescent. They are just assets that are being serviced. But this is a very important part of the business, because what it means is that Accrescent has two revenue lines. One of them is the net interest income that they are used under SCI, and the other one is getting upfront gains from structuring and selling assets off the balance sheet, primary leases to third parties. So next slide on. So in terms of the performance summary for the 9 months, SCI would have recorded net profits of 2.83 million, up 23.6% versus the similar period last year. Also reported a record for total investment income and net investment income of 5.63 million and 3.47 million respectively, with earnings per share of 0.48 US cents versus 0.56 US cents last year. Now, net profits would have been substantially higher. However, the performance for the Q3, which you can move to the next one, performance for the third quarter itself was a bit underwhelming, primarily. So we generated net profits of 370.7 thousand, which is down 64% versus 1.03 million last year. And despite the fact that we generated a record for total investment income of 1.93 million and net investment income of 1.19 million. And this was primarily driven by two factors. One, the first factor had to do with about 288,000 in FX losses that were recognized upfront from the use of index notes on the liability side of the balance sheet. So effectively, upon the initial recognition of those index notes, based on the difference between the exchange rate used to price the index note and the exchange rate on the day, we recognize an upfront loss there. Despite the fact that SCI actually has FX gains because it has a net long USD position, this was offset by this, I guess, one-time effect. The second item has to do with increased provision for credit losses, primarily due to one specific portfolio company, which we'll go through in another slide later on. What I want to highlight here, though, is that the acquisition or the investment in the Puerto Rico credit fund, right, that would have netted SCI 204.2 thousand for 1 month, the month of March, because the acquisition would have concluded, or investment would have concluded on February 28th. And so, based on the accounting standards and rule, we can only recognize 1 month, what happened between February 28th and March 31st, which is 1 month. And that recognition was 304.2 thousand. Of course, this is just a very preliminary estimate, because we still have auditing to be completed and quite a number of different moving parts. So this is just the initial estimation of what the recognition is. Would have also declared during the quarter a dividend of 1.5 million in February 2022, which was subsequently paid in April 2022. Next slide. So from a core earnings and core revenues point of view, SCI continues to do phenomenally well, with a CAGR of 61.5% for the top line total investment income and 47.2% for net investment income, which you can see were all records. I want to point out something here. Maybe I should backtrack a little bit. So the recognition of the income from the Puerto Rico credit fund investment on the formal income statement, that's actually rolled up into fair value gain or loss. That's where the item has been placed for the time being, until we actually get to the audit stage. Next slide just shows you the actual summary of the income statement, which you should all have from the release of the financial results. And as I was mentioning before, Puerto Rico credit fund investment income, 204.2 thousand. It's not broken out from the income statement. But perhaps when we get to audit and on a go forward basis, this line item will be broken out so that you can follow to see, okay, we invested this amount of money. What is the return that we're generating from that? Other item I would want to highlight on this page is that if you look at interest expense, you would see that interest expense for the quarter would have doubled, right? So while net interest income for Q3 2022 versus Q3 2021 would not have gone up by much. And, there are some moving parts going on here. So remember that we financed the acquisition or the investment in the Puerto Rico Credit Fund out of own resources. And those own resources would have been financed using debt capital. So effectively, when we deploy that capital into the Puerto Rico investment, because it's not consolidated all the way up into SCI, then you're gonna have the interest expense on that debt that was used to do the financing, but you're not going to have an offsetting interest income from that investment. What you're going to have instead is what you are seeing there, which is the Puerto Rico Credit Fund investment income, which obviously are going to be a lag between the movement in interest expense versus the gain that we are getting from the Puerto Rico Credit Fund investment income, given that we have only registered 1 month, while the debt would have been raised, prior to that 1 month period. But overall, on a go-forward basis, we expect the Puerto Rico Credit Fund investment income to dwarf any interest expense that is in relation to the capital that was used to finance it. On the next slide, we're looking at whether or not the business is operating according to the threshold limits that we have set for the efficiency ratio and the management expense ratio. So just for those who are uninitiated, the efficiency expense ratio is simply taking, looking at your revenue and saying how much of that is going towards operating expense. And, we benchmark ourselves at the 40% threshold, which is kind of in line with global best practice and international benchmarking. And similarly for management expense ratio, you're looking at your operating expenses, how much of your assets under management is being eaten up by operating expenses. And the threshold that we have set for ourselves is 2.85%, and you can see that we are below that 2.85%. And we intend to keep it that way on a go-forward basis. Next to the balance sheet, shareholders' equity would have gone up to 66.47 million or 3.9%, generated due to the increase in net profits, of course. Total assets would have increased to a record 135.06 million, up 58.5% above last year. And this would have been driven by the expansion of the balance sheet through the utilization of debts. And on the last earnings call, we were pointing out that SCI is extremely lowly levered, and we intend to use debt to finance the growth in the balance sheet and the expansion of the business, which we would have done in 2 phases. First would have been the acquisition of Allocation Financial Corporation, which on the balance sheet is being carried with a value of 23.51 million because AFC is not consolidated all the way up into SCI. So we would have deployed 21.2 million in terms of financing it, and the value carried on the balance sheet is 23.51 million now. And that's because the income, the PRCF investment income that would have shown on the income statement, that would roll up into this value of 23.51 million, along with about 1.98 million related to earnouts, which are related to targets that would have been set for the management of Accrescent, which at the time of acquisition, those targets were set, and given that they are pretty much bang on target in hitting those, then that's where that additional amount is coming from, which is why the value being carried on the balance sheet is now 23.51 million. So on the balance sheet as well, we would have had 101.2 million invested in 30 portfolio companies, which is a new record for SCI. So when you add the 2 set of investments on the balance sheet for SCI, which is the 23.51 reflected in the Puerto Rico Credit Fund and the 101.2 in the 30 portfolio company investment, you get 124.71 million, which is what's in the MD&A. So I just wanted to highlight that for you, because how you would have viewed SCI's balance sheet prior to now would have been a little bit different. It would have just been clean portfolio company investments. So on the balance sheet, we actually have the normal portfolio company investments that you're used to, and then this investment in PRCF, which it gives you the total value of investments on the balance sheet. On the next slide, we have the KPIs, the key KPIs for SCI. As I said before, it's still a lowly levered company by any measure. If you look at debt to total assets, that would have doubled relative to last year, again because of the use of debt. Still below a threshold limit of 0.5 times. Asset coverage ratio, extremely important for the repayment of debt. 2.07 times, coming down from 4.43, which was very excessive. And then debt to equity, still a very clean balance sheet, still extremely lowly levered relative to pretty much any financing firm that you can look at. Our target is really that sweet spot of 1.25 roughly, and our limit is 2 times, and we are nowhere near any of those at the moment. And of course, SCI just has pure financial assets on the balance sheet. So, that's an excellent thing, and that will remain. Now, looking at the summary of portfolio activity for the quarter. So looking at SCI first, and then we'll give you some insight into the Allocation Financial Corporation, which is what is reflected in the Puerto Rico Credit Fund investment. So investment in portfolio companies, spoke about this already, up 37.5% to a record 101.2. So we kind of hit this record a year early because we had set for this to be in excess of 100 million by, I think, December next year, if memory serves me right. Now, this 101.2 obviously excluded 21.3 that I spoke about. So I just explained this earlier. 30 portfolio company investment, a Q3 record in terms of new investment commitments, which was $14 million US dollars. And this, of course, exclude the money deployed into Allocation Financial Corporation. Fair value yield of the portfolio is now at 13%, which I think that is also a new record high as interest rates trend up. The tenor is 1.5 years, but this coming down from 2.1 last year, and I think 2 at the end of December quarter. And this is just a short-term reduction because the 14 million that we would have added to the balance sheet in the quarter, majority of it was a short-term bridge, which is then going to be termed out. So because of this, large transaction, which had a very short maturity, which is going to be termed out to, like, I think 3 or so years, it dragged down the average tenor of the portfolio. But it should, revert by the end of the financial year to the normal 2. Dry powder on the balance sheet, roughly 3.7 million. And, had about 3.4 million in undrawn credit facilities off the balance sheet. And also, SCI is in the process of raising additional capital via pref share of around 14.7 million. So it has adequate, financial muscle to fund roughly 20 million in approved transactions that are awaiting documentation and drawdown, which does not include the remainder of the pipeline. The pipeline is quite robust. So all of this, what we're speaking about here, is just SCI proper. It does not include anything to do with Accrescent or the Puerto Rico portfolio. If we turn now to the Puerto Rico portfolio, Accrescent Financial Corporation, giving you a snapshot of what has happened. So in terms of private credit investments, we have spoken about this on the first slide, 77.19 million in terms of portfolio that's on the balance sheet and our interest earning assets. Just to note that the structure of the business is that it pretty much has 2 different business lines. You have structured credit, which is pretty much what SCI does today. So similar things to what SCI do. And then you have gross credit. And the gross credit are pretty much transactions that are, you could pretty much say that they are financial leases. So they have a pretty good large leasing business where they structure those investments and then sell them out to a third party and recognize upfront gains. So the rate of growth in this business in terms of addition to the bottom line will be superior to SCI at the moment as SCI stands. New investment commitments, without telling you what the specific number is, it was in excess of 20 million US, which was an all-time quarterly record for March. And this, of course, includes the volume that would have been done for true sales. So true sales is that term that I want everybody to get used to. True sales simply means that you structure some transaction and then they end up on your balance sheet at first and then they roll off the balance sheet. So you have sold them with no recourse to the asset afterwards. And some of these assets is what is represented in the off balance sheet amounts that we would have spoken about on the very first slide, right? So it's important to watch true sales volume because true sales means that you recognize upfront income from those assets versus waiting over time to generate net interest income from that activity. So that's just new information for you to put in a pipe and smoke it. The yield, without telling you exactly what the yield is just north of 10%. Obviously, it's gonna be lower than SCI because it's in a more a much bigger economy that is pretty much an extension of the US. In terms of tenor of the securities are less than 3 years, which aligns perfectly with the SCI, which is why one of the many reasons why this investment made perfect sense. So in terms of pipeline, Puerto Rico business has a very robust pipeline. Typically, its pipeline is going to be bigger than SCI. Well, as at the end of March, because SCI pipeline is scaling very rapidly based on new relationship that SCI has been building, which I'll explain in the strategic outlook. So going into the risk management, as usual, the mantra of SCI is to first and foremost preserve shareholder capital while creating value through its disciplined investment strategy. And of course, majority of the investments on the balance sheet are actually to sponsored portfolio credit investment or sponsored portfolio companies. And incidentally, Accrescent also has exactly the same thing because, for example, in the March quarter, the vast majority, more than 2/3 of the transactions that they did were with existing relationships. And about a quarter of them were actually new relationships. So that's a very good thing. Now, in terms of non-performing investment ratio, that was 4.9%, coming down from the 6.1% in the preceding quarter in December, but up from 2.1% last year. And of course, we know that 5% is the threshold that we have benchmarked ourselves against to manage the portfolio within. We have 3 stage 3 assets, no change from the last quarter. That's the same we would have had from the December quarter. All the other assets are at stage 1. However, we have one asset where we have a junior position, and that stage 3 asset, the outlook for it has actually deteriorated materially. And therefore, we took a charge of 576.1 thousand on the balance sheet for that one asset. So in total, when you take the ECL on the balance sheet for this asset, and then you add up the ECL for all the other assets on the balance sheet, the net ECL change going through the income statement was 647.4 thousand for the 9 months and 521.4 thousand for the quarter. So effectively, if you were to back out the ECL for this one asset, the Q3 March quarter would have actually had negative ECL, meaning if you look at the change in the what is happening with the underlying credit quality of the assets and the portfolio, it would have been down from the similar period last year. And for the 9-month period, the growth in the ECL would have been less than the growth in the ECL for last year. So the real problem is this one stage 3 asset, which is being carried on the balance sheet currently at about 2.78 million US. So to give you some additional insight into this worsening credit outlook for this one stage 3 asset, it's in the hospitality industry. It's not in Jamaica, I can say that much. It's a medium-term note, so it's actually a sponsored portfolio company, which means it's part of what I would call it has large financial backers. Let me use that terminology for simplicity. So it was issued with demand letters by senior and junior creditors and placed in receivership. And this was after a particular creditor filed a petition to wind up the company for non-payments of monies owed due to breach of contract. So the company had since entered negotiations with this petitioner, and they mutually agreed for a 3-month period that will allow the portfolio company to secure external financing, which it has actually started negotiation for external financing to complete those negotiations and refinance its debts by paying out this petitioning creditor to stop the wind-up petition from going ahead. So based on all the recent developments, we would have reassessed the collateral value on our junior position, which was adjusted downwards. And effectively, that is what resulted in us taking a charge of 576.1 thousand impairment charge on the balance sheet, projecting out to May 31, 2022. Now, in terms of, if you ask me, okay, for this stage 3 asset, what is likely to happen? The asset in question is actually, an excellent asset. It's beachfront. It's a relatively new asset as well. It's in a market that is doing extremely well. However, this situation, which actually forced the hand of the senior creditor and other junior creditors to actually file their claims and put the company in receivership, because this petitioning creditor could actually have derailed the ship, so to speak. So, we are continuing to proactively manage this risk in terms of having constant dialogue with the sponsors for this portfolio company, as well as with the senior creditor, just to get and of course legal counsel in the Caribbean island where the asset is located, to ensure that we have our fingers on the ball with regards to what's the next outcome. Currently, we are pricing this as a low probability of the situation being resolved. That as it may, so we have to be conservative and make that assumption, of course. Of course, as I said before, the opportunity is there for the sponsors of the company to execute their responsibility, and because the asset is a fantastic asset, to be honest. So we'll see how this pans out. But this is the only asset on the balance sheet that is a what I would call a problem asset. So just being totally upfront and clear on this. And we see what pans out in the next 80 plus days that remains. Moving to portfolio allocation, exposure by industry. So with the investment in Puerto Rico, you would see SCI diversification is now spans across 16 industries, which is a record, up from 11 before. You can see where we were in December versus where we are now. So we would have added 5 new industries that did not exist before: healthcare, commercial real estate, services industry, retail, and other. And inside other, we have that's primarily comprising of logistics services. Healthcare, of course, we would have mentioned that Puerto Rico is the largest biopharma industry in the US. So we expect to ramp up our exposure in this as we scale the business on a go-forward basis. And of course, Puerto Rico coming out of a decades-long situation where they were in default, and they just came out of that. The real estate market is actually red hot, and the US government has actually approved, several billions in reconstruction development monies. And so exposure to the commercial real estate market, our mortgage market in Puerto Rico is an excellent fit for Accrescent Financial Corporation, of which, of course, SCI will get benefit from. So the largest industry for SCI is commercial real estate, which is primarily from Puerto Rico. Hospitality with 13.3%, financial 10.1%, and energy with 10%. Looking at by region, you see where we were in December, where Jamaica was 45%, that has now rescaled, where Puerto Rico is now 39.8% of the portfolio. Jamaica falls to second place with 22.7% of the portfolio. And we have the US with 7.5%. So we actually added 5 new regions, which would be Costa Rica, Panama, Puerto Rico, Dominican Republic, and Mexico, right? All of those came with the investment in the Puerto Rico Private Credit Fund. However, Mexico, Dominican Republic, Panama, and Costa Rica are all what you call legacy assets that were ring-fenced during the acquisition. So all of these, the Puerto Rico business, pretty much 100% of it is collateralized. That's the type of business that they do. So these ring-fenced assets, when they are closed out, it means that effectively SCI will only really and truly have exposure to 9 territories. The United States exposure was actually an exposure that was created by SCI during the March quarter, and that was to fund an acquisition in the Caribbean by a portfolio company whose holding company is actually in the US. And so that's where that 7.5% is coming from. So that 7.5% is not coming from the exposure through Puerto Rico, it's coming from SCI itself. So as we would have promised, when we at first announced the acquisition, and we said that the allocation to Jamaica would fall once this occurs, we are seeing that coming to fruition now. So we're just providing with the update to what we would have discussed at length in previous periods. So now going to the last slide, which is the outlook and the strategy work in progress. Maybe spend 3 minutes here and then we can take a question. So of course, SCI is almost 5 years old, and 5th year anniversary is going to be a big deal for SCI. We're really looking to break the barriers and really scale the business. And when we speak about scaling the business, we're really talking about doubling up, right? Scale doesn't, young company growing, you need to be speaking about how you double in X or Y years. That's what we do, and that's what we mean. So the acquisition was, we were to close it as we promised, and we closed that on February 28th, within the timeline that we would have communicated at the last meeting. We know at the stage where we need to integrate integrate the acquisition into SCI, and the target to complete that integration is July of this year. And the next step is to then scale the business. And of course, we have started that process. We have an executive from the investment manager who was actually moved from Jamaica and is residing in Puerto Rico a month ago. And he will be residing there for a while yet to assist the Puerto Rico. Well, first of all, to lead the integration process overall, in terms of, there are 2 sets of integration going on, integration of Accusent into SCI proper, and then of course the integration of the operations of Accusent into the portfolio manager, which is going to be Sygnus. So, and then of course, building relationships in the market and to scale the business. So that is an ongoing process which has already started. And we are actually working with a consultant, I believe PwC, in terms of the integration process. That is ongoing. So the second key strategic item here is rescale and reimagine SCI's growth path. I would have mentioned this on the last earnings call. The numbers aren't completely finalized yet, but I can give you a hint, right? So the target was for 8 million in revenues in total investment income by December 2023. That's what we would have communicated, I think, 2 years or so ago, almost 2 years ago. And what is likely to happen is that this timeline is probably going to be extended to June 2024. So just to align it with the financial year end so that people can compare it a lot better. And that number of 8 million is likely to be somewhere north of 12 million. So pretty much, extend the timeline by 6 months and extend the revenue number by about 50%. That's pretty much what's going to happen, right? So it's in progress. Of course, we want to just finalize the integration of Accusent into the business first, but pretty much that's kind of a ballpark where when we make the formal communication, that's kind of where it's going to be. The minimum annual ROE and enhanced EPS, that's in progress. Of course, we'll communicate that when we are communicating the new revenue trajectory, which I just mentioned is likely to be around the minimum $12 million ballpark. Of course, increase in dividends to shareholders, that's ongoing. We are currently at 1.55 million, and the dividend is likely to step up in the upcoming financial year. Whether that is going to, let me leave it at that. Increase credit line facility to obviously fund, the new scale that the business is going to be operating on. I mean, the business now has a portfolio of almost $180 million. And of course, in terms of assets under management, assets under administration, you're talking about north of 200 million, right? So what we are doing currently is negotiating a term sheet for a large facility. And when I say large, right now, our total debt on the balance sheet, I think, is 62 million. And we're talking about something that over the next 2 years, certainly, would be double that. But to start out, would be, closer to somewhere in the $100 million ballpark. And the reason why this large type of facility, which would be a revolving facility, would be necessary is because SCI will be launching new financing solutions for the English and Dutch-speaking market. Pretty much, we have actually done the test cases for these over the last, I would say, 6 to 9 months. And we are now ready to formally let this become a formal business line, which would then also filter through to a new revenue line for SCI and the income statement. So in other words, creating a new revenue line where we have upfront gains being recognized alongside net interest income. So kind of diversify the revenue stream for SCI. But you hear a lot more of that when we are formally communicating the updated strategy. Just want to bring that to the fore. Number 3, strategic partnerships. We spoke about that at the last earnings call. We have already built some very interesting new partnerships. And one of these partnerships is whom we are negotiating the new term sheet from. Obviously, we love our Jamaican financing partners and we'll continue to have those relationships, but we have to diversify our financing source to sources that can give us the type of facilities that can allow the firm to grow at scale. So we are currently in negotiations to and far advanced in terms of trying to get to term sheet stage and then to try to close. And of course, we'll make that announcement if and when that comes to reality. Second thing is we said we wanted to do under strategic partnership, which is very important, is to build partnership with global institutional investors, and this is key for a number of reasons. Obviously, we want to expand the number of investors that we can co-invest with, partner with, syndicate transaction with, but who are also looking to invest. Because if you look at SCI, and more particularly, the Puerto Rican business, we also are going to be looking for partners who can actually deploy capital into the Puerto Rico business. So at some stage, the Puerto Rican business can actually raise capital itself. So in a sense, by not being required to be consolidated up into SCI, that actually gives SCI a huge advantage in terms of if the Puerto Rico business was required to raise capital, it could sell shares, it could sell off some of its shares to other investors, it could do an IPO, it could do a number of different things, which would generate substantial benefit to SCI shareholders. So we have actually forged quite a number of new partnerships, and you'll learn more about these, and we'll continue to do so. As we are speaking, some of the executives from the investment manager are actually in transit to New York to have various discussions with partners who are very, very interested and keen to participate in the 2 different legs of the business, the Spanish-speaking part of the business, as well as some of those investors being interested in the English and Dutch-speaking part of the business. So these are early days yet, but those partnerships are being forged, and we are looking for great things to scale the business substantially over the next 12 to 24 months. And then finally, the share buyback. As you all know, or if you don't know, at the 5th year anniversary, SCI actually it will be announcing what was already in all the agreements and in the prospectus, etc., that in starting at the 5th year, SCI would do a share buyback. And so we'll make an announcement on what the structure and nature of that buyback is going to be sometime in around September 2022 at the end of the financial year, when the formal trigger for that buyback would become due, so to speak. So in summary, the business is in phenomenal shape. We expect substantial growth on a go-forward basis. Both legs of the business are doing extremely well. Yes, we have an issue with one portfolio company, but we have gone 19 quarters without any significant issues. At some point, we are always going to have a day one when one of these companies we will have our first really challenged credit. But we are well prepared and armed to manage that situation and continue to pay the usual dividends to shareholders and increase shareholder value and grow and expand the business, which we think is in a very good shape. And that's the end of the presentation, and we can take questions.
All right, thank you for that, Jason. Very, very thorough presentation. So before we jump into the MD for the Q&A, just going to pause to have some poll questions. Just ask that you guys can just fill this out. Just 4 poll questions, very short, very brief, and the quicker we get through, the quicker we can dive into the Q&A section. So the poll should be on your screen. You guys can just start filling it out. Again, leave it up for about 30 seconds, just as much persons to answer. All right, that's for about 10 more seconds. And thank you. So that's the end of the first poll. There is another question for you that should be launched now. You can go ahead and start filling out this second poll question. All right, about 20 more seconds. And thank you. So we'll just have 2 more launching now. You can go ahead and fill out this poll. And really and truly, this just to allow us to get an idea of, who are the individuals on the call, allow us to, ensure that, we're articulating the content appropriately based on who it is that are joining our earnings call. We want to ensure the information is tailored appropriately and that all persons, based on what information that they would need based on their background, would be able to leave from this with informed or updated information. And that would be, and then our last one, which is a very important one for Sygnus particularly, when you speak about environmental, social, and governance. This one is particularly interesting for us. If you could just complete this last poll, just give us a bit of insight. What are your views on ESG? I'll leave this one up for about another 15 seconds. And great. Thank you very much, guys. So I did that so Jason could catch our breath. So let's jump into the Q&A section. A lot of questions will have come in. So let's just start from the top. So we got a question from Mr. Rayan Thelwell. The question is, when do you expect to have that credit facility to materialize? Referring to the discussed credit facility with new form partners. What is the expectation for this credit facility to potentially materialize?
So good question. So Uh, we expect a term sheet certainly within this week into next week. So maybe in 2 weeks we expect kind of this term sheet, and then in terms of closing out, we would expect that to occur certainly by the time we end the financial year. That's kind of the ballpark. So not a very long time, a short time frame. So I would say worst case somewhere in July, thereabouts.
Thanks for that, Jason. So a question we got from David Rose is regarding the integration process. So does this mean that there will be no NCI representation and no consolidation of AFC's general expenses into SCI?
That is correct. So effectively, what SCI will get will go straight to the bottom line, right? So it's just a pure net profit that our net value that will flow through to SCI, which is clean and dare I say juicy, just based on the metrics that we would have used when valuing the company, versus where the company is performing right now as we speak. So to confirm, so to answer the question specifically, only thing that's coming into SCI is going to be the net benefit, which effectively is after you ship out all the expenses, etc. That's just the value that flows through.
Thanks for that. So another question from Ryan Thelwell. Particularly, the question is directed towards the NPI. So the NPI ratio as at Q3 was 4.9, which is within the threshold of 5%. But this was noticeably lower than the 6.9 that was reported for Q2 December, and is higher than the 3.1 in Q3 2021, also 2.8 in the June 2021 period. Currently, SCI is within this 5% threshold. What are the steps being taken to reduce this NPI ratio and bring it, obviously, a bit further away from the threshold limits?
Good question. So, I mean, at the moment, that is just simply, ensuring that we originate very good transactions with adequate downside protection, which we have been doing, to be honest. But you can't get it 100% at all. If you have as your portfolio grow, you're gonna have one or two problem assets, and the key is to ensure that we don't. That's the reason why we set that threshold. So as we go through time and the value of the portfolio increases, the ratio is gonna clearly come down. We are for the three problem assets. I spoke about that one key one. The other two assets, they are heavily there's no issue with them, so we don't have a problem with them. But in terms of looking at the portfolio, all the other assets on the portfolio are actually stage one. So that's one way in which we manage the NPI, by ensuring that we constantly are in communication with portfolio companies. We are doing our covenant checks on a frequent basis, and because we are doing that, we are heading off any potential risk that is coming down the pipe from early. So as we go through time, we expect that given that at this moment we don't have any other assets on the portfolio that's going to really give us any significant challenge like what we have with this one particular asset, that the ratio will be reduced because we're actually adding assets to the balance sheet that are actually well structured and has adequate downside protection. So as we go through time and the portfolio value increases, even if by chance we have additional non-performing investments as a percentage of the overall portfolio, based on the rate of growth in the portfolio, that percentage will actually get closer towards 3% and lower. And we would expect this to actually occur, over the next 1 or 2 quarters, thereabouts, because the value of the portfolio is actually growing pretty quickly.
All right, thanks for that, Jason. A question from David Rose is, could they expound or share any additional information about the upcoming capital raise in terms of the preference share?
So that pref share, I think, is about to be launched maybe within days, or a day or two or something like that, officially. So it's pretty much just gonna be about the equivalent of 14.7 million US. And that is just capital that we need to fund current investments, current transactions that have already been approved and are moving through the documentation stage, because we have roughly 20 million, about 22.2 million actually in approved transactions, with some of them having stage drawdowns. So because when you take the amount of capital that we have on the income statement now, on the balance sheet now, our free cash, our dry powder, then clearly we need additional capital to put into these investments. And this will actually bridge us over until the revolving credit line facility is in place. So the details of that transaction will pretty much become public knowledge in maybe probably by even the end of the day today, tomorrow. Certainly in this week that we are in. 14.7 up to 14.7 million with a very interesting structure by the lead arranger. I'm not sure if you want more detail than that, David. If I answer the question.
All right, thanks for that, Jason. So another question that would have came in from Keith Mitchell is, in terms of credit risk, what is the rating of the portfolio?
Okay, so we have internal rating. SCI itself has an investment grade rating from CARICRIS. So I guess you could say the portfolio is rated investment grade, BBB/stable on the Jamaican credit rating scale. So that was before March, right? That was, that rating was from September last year. We are currently going to the annual rating assessment exercise, which obviously was delayed because our financials were delayed because we had to, is that night and day, burn the midnight oil to actually get some of the accurate information into SCI. Because as you know, Puerto Rico does not use IFRS, it uses US GAAP, right? GAAP. So when the portfolio is re-rated, given the exposure that where Puerto Rico is now the largest part of the largest exposure that we have in terms of if you were to, even though it's not consolidated, if you look at the exposure, the majority of the exposure is to Puerto Rico, right? So then in that instance, I suspect that we will, let me not preempt anything, but I suspect that given the quality assets that we have in Puerto Rico. So for example, in Puerto Rico, the companies that, medium-sized companies in Puerto Rico are going to be large companies in Jamaica or in the Caribbean, right? Let's put it that way. You're talking about 100.7 billion economy, and Jamaica is like 15 billion, right? So clearly, a medium-sized company in Puerto Rico is gonna be much bigger than a medium-sized company in Jamaica. So I expect that on a go-forward basis, given the quality exposures that we have in Puerto Rico, that if you were to think about the rating of SCI, I would expect, if it doesn't happen in this rating cycle, perhaps because it was just added for 1 month, for March, and the rating cycle assessment is actually going to be for at the end of March, then certainly on a go-forward basis, the rating should improve substantially in my view, because whenever Puerto Rico gets its first formal credit rating, I suspect that rating is likely to be substantially higher than what SCI is currently rated at, which is a Jamaican rating scale. Hope I've answered the question.
Thanks for that, Jason. Another question that came in from David was, how is SCI doing in this rising interest rate environment in terms of seeding or sourcing new deals?
Well, I think you would have seen from my earlier comments, we have 20 million in approved transactions sitting in documentation. The pipeline is multiple times that, and we are seeing some interesting. So part of the reason why we want this huge revolving credit facility is because some of the money is going to be utilized for transactions that won't generate net interest income. It will actually generate upfront fees and gains without giving away our SCI strategy too much. So pretty much, is creating what you call a warehousing facility. So we are seeing huge demand for the use of alternative financing, which in an environment of rising interest rates, growth companies don't want to be repaying principal, right? They don't want to be amortizing. They want the ability to pay principal to have more bullet type structures. So even if you're amortizing, the amortization need to be very small because you're growing and you can't afford to be paying back the cash flow. And rising interest rates creates that problem. So we are seeing many companies from some Caribbean islands that we weren't looking at them, but they have reached out to us with pretty large transactions, and we're actually going through non-disclosure agreements with some of those companies in those islands that want the flexible financing. So in all economies all over the world, whenever you have rising interest rates or you have slow growth or what have you, that is when growth companies find it hard to get access to financing, which is why SCI was created in the first instance. And this is why the alternative private debt market was created in the US and globally in the first instance. So to answer your question, David, yeah, SCI yields are going up, which is benefiting SCI. And we are seeing tremendous demand for the flexible capital. And that's the reason why we want a big revolving facility to take advantage of the market, because we can now syndicate large deal, let's say at $40-50 million deal, and sell it down to other persons, or participate in a syndication, or underwrite a very large, $30-40 million transaction, right? And the ability to do that generate fee income and other type of income that we could not do before because we were simply too small. So now that we have this newfound scale, then all of these new ways to provide, private credit financing solutions to the market are coming on stream. But you can't do it with just $20 million worth of dry powder or 10 million. You need like 100 million and 200 million, right? But you can't raise that money and have it on the balance sheet. Because if you raise the money and have it on the balance sheet, it means that you are paying interest expense on 100 million or 200 million while you have not deployed all of the money into new assets. So that's why you want to have a revolving line that you can draw on it to fund whatever you need to fund. So you have the backative, you can make a big talk and go out and do what you need to do because you can draw on the line at any time. But you are matching the drawdown of the line with the deployment of the capital into these new higher interest bearing assets. And so you get the perfect match, which increase your net interest margin and increase your net interest income, while at the same time generating fee income from all the stuff I spoke about in terms of syndication, underwriting, and so forth. Yeah.
All right. Thank you for that explanation, Jason. So one question that would have come in from Anthony Allen is, what is being put in place going forward to mitigate some of that FX losses that would have been recognized upfront?
Good question. So let me start out by saying there's a small possibility that the FX loss might actually be reversed. But be that as it may, right? The FX loss really, so SCI is actually net long USD. And clearly, if we get 100 million, if we get a revolving credit line, let me not jump the gun, a large revolving credit line, then we won't have any issues with J dollars on a go forward basis, right? Because then our financing will pretty much match the transactions that we are doing. And so because we are net long, what we expect to happen, because we would have access to this large pool of capital, is that we can easily mitigate any short term, for example, matching that we would need to do. Suppose we have to fund a J dollar asset, Jamaican dollar denominated assets, then we could easily match that quite easily, because we could do some proper hedging with that line. So we don't expect on a go forward basis to have this challenge, but to get to the stage where we could actually go and have a conversation about a line that is bigger than 10 million US. Because remember, our total line right now is less than 7 million US, right? The revolving credit line is less than 7 million. To go and have a conversation of a line that's even north of 20 million, we had to do all of these things before. So we pay the price up front, but then on a go forward basis, we shouldn't have that problem. I hope I've answered the question.
Thanks for that. So I'm seeing, just based on this, just probably one more question from Karen Dan. He says, additionally, with regard to the integration of Accrescent and SCI, what are some of the factors that would lead to it being a 4-month process post-acquisition?
That will lead it to being a what?
Taking 4 months post-acquisition. Given the target is now July, and it was done in February, what are some of the factors that are leading to it taking almost 4 months?
Normally when you do an acquisition and you integrate in a firm, it normally takes 1 to 2 years. So just to be absolutely clear, that's kind of like the timeline that you have to because there are many moving parts in that integration. So the reason why this is actually taking such a short time, so the time is actually short, is because 2 things are happening, right? So it is an internally managed company, which means that it has its own staff, its own set of operations, payroll, all manner of things. SCI is not structured like that. SCI is just a pure financing firm, no employees, no costs other than the management fee and the corporate service fees and some small other operating expenses, right? It doesn't have to do with all of those things because the fund manager is the one who has all of that headache. So the first thing that is happening with Accrescent into the integration is simply to reorganize it such that it is now a pure financing firm, that the only thing that is on its balance sheet are the private credit assets. So in other words, all the other assets that's now on the balance sheet, a normal operating firm have all kind of assets, right? And all kind of liabilities. So all of those need to be moved out. So what we have done is that we have already structured all the companies that Accrescent will be, consolidated into already. And the legal process to do that in Puerto Rico, we expect that to actually happen, by the close of business on June 30th / July 1, which is why I said, by July. So once that happens, then there's a second integration that will need to take place, but that does not affect SCI, right? Because this is now with the manager. So the manager will need to figure out a whole series of things in terms of, okay, you're going to have staff contracts, you have different types of, operations, you have the integration of your IT, you have your marketing, all of that jazz. The manager is going to do that integration. That integration won't actually be 100% complete until December. We are targeting December of 2022. So just to give you a good picture of what we are talking about when we say that we announce an acquisition February 2022, and we are telling you that the integration process into SCI is going to complete by July. That is actually a record. So just to be absolutely clear on that. So I hope I've answered the question.
All right, thanks for that, Jason. The other question I saw was just about will this recording be available? Yes, it will be, along with the presentation itself. It will be on the Sygnus website for everybody to view after the call. There are no more questions. So I just want to say thank you, Jason, for making yourself available for this earnings call. Thank you as well to all the listeners that came in and were able to ask some questions and got some insight into the Sygnus credit. This is the new Sygnus credit investment going forward. This is how we'll be looking. And, we continue to work toward driving value for our shareholders and to our financial partners, both locally and within the region. And, we look forward to any questions you may have. Once this is done, you can direct to Sygnus Capital, sygnuscapital.com. You can reach out to myself or Jason directly. And, we'll continue to make ourselves available through investor relations to, ensure that, we're able to continue to drive value for shareholders. So again, thank you, everyone. And we hope you have a good evening.
All right. Thanks, guys.